Yes, sir. Please start.
That it's not live yet. Okay, now it's live.
Yes, sir.
Nice.
Yes.
So very good morning to all of you. Well, very good morning to all of you. What we have discussed in our last session was I think 4 days back when we were discussing regarding levy collection and charge of GST. So I want to explain first that what we have discussed, what we have already covered, and then we will start with the today's discussion. First of all, we were discussing about the charging section of GST. I have already discussed about the supply, what is called mixed supply, what is called composite supply. That I have already been discussed. I have already discussed in this previous sessions, and now from today we are starting with a new with a topic that we have already covered in the last session. That is levy collection in charge of GST. What we have already discussed. First of all, I have told you that in charging section we have two section. One is of CGST and another one is of IGST. Section 9 subsection 1 of CGST and section 5 subsection 1 of IGST. And basically what they says that if you are doing any interstate supply or intrastate supply, you have to pay GST. And what is the maximum rate of GST? It is 20% CGST, 20% SGST. And if we are talking about IGST, then it is 40%. After that, second point is what are the rates what are the rates of GST? So there are many different rates of GST, and the main point is that rates are actually recommended by GST Council. Rates are actually recommended by GST Council. So rates are actually decided by GST Council. One more thing is IGST on import of goods shall be levied as per the custom laws. So we are not going to cover import of goods because it is actually covered by custom laws. After that, we have already discussed that there are two guys in a supply. First one is called supplier and another one is called receiver. So in what is the meaning of supplier? The person who is supplying goods and services is called supplier. But the main point is what is the meaning of receiver? So receiver is the person who is actually liable to pay consideration. Even if the person who is receiving is a different guy, like I have taken an example of Patanjali. Patanjali is doing work on job work basis. So Patanjali is ordering someone to supply directly to its job worker. So Patanjali is liable to pay consideration. So even when the goods are received to any other person, Patanjali is liable to pay consideration. So he will be considered as receiver. But if the supply is without consideration, if the supply does not involve consideration, then of course the person who is actually receiving is a receiver, not liable because there is no consideration. Then of course the person who is actually receiving the goods or services will be called as receiver. After that, I have taken this example. After that, I have already covered that who is liable to pay GST. So there are two types of mechanism. First one is called forward charge and second one is called reverse charge. There are two mechanisms. In forward charge, the supplier is liable to pay tax. That is called forward charge. But in reverse charge, I am selling the goods to any other person. That buyer who is receiving the goods is liable to pay tax to the government. He is not going to pay to me. He is going to pay directly to the government. That is called RCM, reverse charge mechanism. And I have told you why there is a need of RCM. The reason is very simple. The government wants to capture giant. They doesn't want to capture ants. They wants to capture giant. And the insurance agent is supplying services to LIC. Then LIC is the giant. So he is going to pay directly to the government. It is very easy to collect tax from a big giant rather than small ants. And that's why LIC will be liable to pay GST on the behalf of all the agents. So that is called RCM. I have already also discussed one more example that was regarding legal services. There are a lot of cases where RCM is applicable. Actually, section 9 is divided into 5 parts. 9.1, 9.2, 9.3, 9.4, 9.5. 9.1 is very simple charging section, which we have already discussed in our first slide. 9.2 talks about when GST will be imposed on petroleum product. It will be imposed from the date recommended by council. The main point regarding RCM is three different points. First one is 9.3, then 9.4, and then 9.5. We will discuss later about 9.3 and 9.4 because it will be covered after exemption. But 9.5 that talks about supply through e-commerce. Notified services provided through e-commerce, that is also covered in RCM. What are these notified services? I have already explained that in 9.5 we will be discussing a lot of notified services which are covered in RCM, which are provided through e-commerce. And what is the first service? The name of the first service is actually radio taxi. If we are Ola is if driver is supplying services through Ola, then who is liable to pay GST? Actually, Ola is liable to pay GST under RCM. And there is no if, there is no but. So Ola is the only, Ola means the e-commerce operator is liable to pay GST on the behalf of drivers. Driver doesn't have to pay any GST on such kind of supply. Second thing is hotel accommodation. If a person is supplying goods through hotel, supplying services through MMT or GoIbibo like e-commerce platform, then e-commerce platform is liable to pay GST. But in this case, there is a if. It means e-commerce will be liable to pay GST only if hotel is unregistered. If the hotel is registered, then e-commerce operator is not liable to pay any GST. Okay, so hotel is registered, then e-commerce operator is not liable to pay GST. GST will be paid by e-commerce operator only when the hotel is actually unregistered. Okay, moving towards the next slide. Next slide talks about housing, maintenance and housekeeping. It is basically, I have given example of urban clap. Like a carpenter is supplying services through urban clap. So who is going to pay GST? Urban clap is going to pay GST if that carpenter is unregistered. So there is one more, that is housekeeping. And then we have discovered, we already also covered restaurant and food delivery services. A person is supplying services through Zomato, Swiggy. The restaurant owner is liable to, is not liable to pay GST on that supply. Swiggy is liable to pay GST, and there is no if. So of course, Swiggy will be paying GST in each and every cases where there is an online sales there, when there is a food delivery sales. After that, we have discussed section 10. We have covered section 10. And in the section 10, we have started with a very important point that is called composition levy. That is also known as composition scheme. So I have already discussed that, sir, what is the composition scheme? What is the requirement of composition scheme? So basically composition scheme means a scheme for a small taxpayer. Small taxpayers want to pay lesser tax and they want a simple tax structure. That's why government has introduced a scheme for small taxpayer. That scheme is called composition scheme. First of all, why I'm saying this is a scheme? Because of course this is optional. This is optional. So so this scheme is basically optional. Second important thing is who is eligible? Who is eligible for this kind of scheme? First of all, this scheme, the person who are eligible for this scheme is manufacturer, traders, restaurant services. So the three guys who are basically eligible for this scheme is manufacturer, trader, and restaurant services. And another thing is what is the eligibility criteria? So eligibility criteria is very simple. If the aggregate turnover in the previous year, if the turnover of the previous year is not exceeding this limit, what is the limit for these 8 states? For the 8 state, Northeast 8 states. So for these Northeast states, the limit is 75 lakh rupees. And for all the other states, the limit is 1.5 CR. So for 8 states, the limit is 75 lakh, but all the other states limit is exactly 1.5 CR. So for other service provider, there is also a scheme, and the name of and the turnover criteria is very simple. It's 50 lakh for all the states. It's 50 lakh for all the states. Okay. So manufacturer, trader, and restaurant services can avail this scheme, but the limit is 75 lakh for 8 states and 1.5 CR for all these states. For other service providers, the aggregate turnover should not exceed 50 lakh. It is 50 lakh for all these states. So in case of service, there is no different limit for the states. But in case of manufacturing, trading, or restaurant, there are different limits. Like for trader, the limit is for manufacturer, trade, and restaurant in 8 states, the limit is 75 lakh. But for all the other states, the limit is 1.5 CR. One more thing. I have told you that either the person can be fall in the first category or second category. So if there is a trader or there is a manufacturer, but he is also supplying some services. Some services, not he's majorly supplying goods, but he is also supplying some services. Then what is the criteria that a trader can supply some services? The service value should not exceed 10% of the total turnover. The value of services, if he is supplying goods, but he also wants to supply some services, then of course he can supply services up to 10% of the aggregate turnover. So if a person is supplying, if the turnover of the person is 1 crore, he can supply 10 lakh rupees services in that. Okay, so a trader can supply services up to rupees 10 lakh. Interesting. But if a person is a service provider, he is providing services like I am teaching. Like a person is repairing something, he is providing repairing services. Can he supply some goods? Because normally what repair person do is he also carries some parts and goods with him. So if when he is going to repair something, then he also offers that I can also provide these kind of goods. I also have some kind of goods you can buy from me directly. So sometimes repairing person also supplies some parts. So whether a person who is providing services can also supply some goods, yes, the limit is 5 lakh rupees. So a person whose service is 40 lakh, how much goods he can supply? Up to rupees 5 lakh. So if the turnover is 45 lakh, 5 lakh can be of goods and 40 lakh can be of services, not exceeding 5 lakh rupees. But in the first case, it is minimum 5 lakh, maximum 10% of the aggregate turnover. I have already covered some examples from your module. I have already tick all the examples that you can read in your module. All these things are actually covered in your module examples. One more thing is, when we are talking about turnover, we will exclude interest. We will not include interest income while calculating turnover. Even when we are calculating any kind of turnover, na, we will be only we will be covering interest. We will not be covering interest. Interest is not included. Okay, there is some slides are. I have to just adjust this screen little bit. Some headers are actually not covered. Okay, now this is covered, but size is bigger, so I'm going to adjust the screen. Now it is clear, I think. Okay, there is little bit left downside. Now it is covered. Now this is covered. This is the whole screen now. Okay. Okay. So now the point is that the interest income is not included in the turnover. If we are talking about the turnover there now, then we are not comparing. We are not including interest income in that. So interest income is not included in this turnover. Moving towards the next point, we have already discussed that what are these 8 states. So basically these are the northeast states, but Assam is not here. Uttarakhand is here. So other than Assam, all the northeast states are covered in this list, and one more is Uttarakhand. So these are the 8 states where we have a limit of 75 lakh rather than 1.5 CR. For all the other states, we have 1.5 CR, but for these 8 states, we have a limit of 75 lakh, but only for manufacturer, trader, and restaurant services. If we are talking about other services, then there is the same limit for all these states, whether it is northeast states or whether it is other states, the limit is absolutely same for all these states. Okay. Okay. After that, we have also covered one more thing. Sir, we are calculating aggregate turnover. So in the definition of aggregate turnover, I have told you that we will include all taxable supply, all exempt supply, all zero rated supply, even all non-GST supply. So we will be including all the supplies a person is doing, whether he's doing taxable supply, whether he's doing exempt supply, whether he's doing zero rated supply, whether he's doing non-taxable supply, but it does not include, first of all, inward supply under RCM. If I am paying tax on my purchases under RCM, it should not be included in my turnover. Like I am availing legal services from someone. So should my legal services, what I am availing from some lawyer, is it part of my turnover? Of course not. If something is included, then we have to exclude it. If in our turnover, we are paying tax under RCM and the supply is included, it should be excluded because it is not my sale. We are basically covering sales. It is not my sales. It is basically our purchases, and therefore it should not be included while we are talking about turnover. So in turnover, this supply will not be included. Very nice. Next one is we have already discussed about aggregate turnover. We have already covered aggregate turnover. What is aggregate turnover? I have told you to cover a lot of examples from module. I have already marked you that how many examples you can read from your module. Even if you are having some doubts, it's better to have it's better to complete the session today, and then I will show you the module that what you can read from your module. What should we cover and what should we know? What we can avoid. I will take all the examples from your module so that we can cover all this composition chapter. So our first target is we will cover this composition part first, and then we will start with the new topic today. So I have already ticked all the examples from the module. If you are having doubt, just wait for a few minutes. If we are covering this session now, all the doubts will be already covered. Okay, there are some doubts. is composition scheme under GST similar to presumptive scheme under income tax? Yeah. More like it's like a presumptive scheme under income tax. So composition scheme is more like presumptive scheme under income tax. Very same. Next thing is, sir, humble request to you that please create a Telegram channel where you can share the presentation like other faculty. Okay. If other faculty are actually sharing their presentation through Telegram, then I can also do that. There is no problem with that. I will also create a group of Telegram. If it is permissible, if other faculties are doing it, I will ask once to the management that is it possible that I can create a Telegram group? Then of course I will create a Telegram group and I will give you the name of the Telegram group and I will share all the presentations there only if the management is permitting me. If the coordinator is permitting me, I will do that. I don't have any problem with that. Okay, so I will ask once that is it possible? If is it possible, then of course we can create a Telegram group. Okay. I have already shared some presentation. It is very easy for me to share all these presentation with you. So there is no problem with that. Okay. Next, everybody is saying about basically slides and presentation only. Everybody is talking about slides and presentation only, that we need WhatsApp group, we need slides, we need presentation. Okay. Then there is no problem. I will ask once, and if it is possible, then of course I can create a Telegram group. Okay. Okay. Is that clear to everyone? Nice. Now we are starting with, now I can start today's session. This was the discussion that we have already completed. This was basically the revision of the last session. And now we are starting today. I have given some example here. In this example, Mr. X is a trader. He is registered under GST. And he is having the following turnover is 2021-22. He is from a regular state, means he is not from these 8 states. He is from other than 8 state, and his turnover is in the 21-22 is he is having turnover of taxable supply 95 lakh. He is having turnover of exempt supply 15 lakh. He is also having interest income of rupees 12 lakh, and he is also having turnover of taxable services 8 lakh. We have to state whether Mr. X is eligible to avail composition scheme or not. I am giving you 2 minutes to solve this example. I am giving you 2 minutes to solve this example. I have already given you what is the definition of aggregate turnover. It includes all taxable supply, it includes exempt supply, it includes all taxable supply, inward supply under RCM should be excluded, tax should be excluded, and interest income is also excluded. So tell me what is his aggregate turnover. I am giving you 2 minutes. Tell me what is his aggregate turnover and tell me whether he is eligible to avail composition scheme in 22-23 or not. Means in the next year, whether he is eligible to claim composition scheme or not. Start doing this question and just calculate it on the calculator, calculate it in anywhere and just tell me what is the aggregate turnover of the 21-22. Therefore, we can decide whether he is eligible for composition 22-23 or not. Let's start. Okay, I think you have completed this. And now I can share what is the answer. What is the answer of this? I can share it with you. It is very simple. What we will do is, this is the example and just a second. Okay, I think this will include 95 lakh rupees will include. ₹95 lakh will include, this will include, plus 15 lakh rupees will also include because it includes in the aggregate turnover. It is included in the definition of aggregate turnover, but this will not include this 12 lakh will not be included because it is an interest income. Interest income should not be included while calculating composition scheme. So it is not included in the aggregate turnover. And this 8 lakh rupees will also be included. So the total turnover is 95 plus 15 lakh. It is 110 plus 8 lakh, it is 1,18,000. And I can say, yes, he is eligible. Why he is eligible? Because he is a trader in a regular state, and the threshold limit for a regular state trader is 1.5 CR. So if turnover is not crossing 1.5 CR, of course he can avail composition scheme. One more thing, his turnover of service is not exceeding 10% of the aggregate turnovers. What is his AT? His AT is 1 crore 18 lakh. His AT is basically 1 crore 18 lakh. His AT is not exceeding, his AT is 1 crore 18 lakh, and his AT is not exceeding the 10% of the aggregate. His service is not exceeding the 10% of the aggregate turnover. So of course he is eligible for composition scheme, because first of all his aggregate turnover is not more than 1.5 CR, and his service proportion is not more than 10% of the AT. So of course he is eligible for the composition scheme. Clear? This is the question. This is a practical question. Now, very important. Now this is very important. What we are discussing now, this is very important. Listen very carefully. This is very important. Now we are going to talk about tax rates. Dekho, I have already discussed that composition scheme is beneficial for a small taxpayer, because here the tax collection, tax payment will be lesser. So sir, what is the applicable tax rate for all these guys who are availing composition scheme? And this is very important. For manufacturer, the rate of GST is 0.5% plus 0.5% of the turnover of the current year. So how much they are doing turnover? Turnover means aggregate turnover. Turnover means aggregate turnover of the current year. It means they have to pay 1% of the aggregate turnover in the current year as a tax liability. So the rate of GST is very less. Normally the trader of goods, the manufacturer, normally the manufacturer pays different rates. Like if he is manufacturing hardware, he has to pay 18% GST. If he's manufacturing some other kind of thing, then he has to pay 5% or 12% GST. But in the composition scheme, the rate is very simple and flat. A manufacturer has to pay 1% of the turnover as a tax. Okay, 1% of the turnover, but you can see here that it is 1% of the turnover, and turnover means aggregate turnover, and aggregate turnover means it includes taxable supply as well as exempt supply as well as non-GST supply as well as zero rate supply. If a manufacturer is supplying taxable supply of 1 crore and he is supplying exempt supply of 20 lakh, then his turnover is 1 crore 20 lakh. So he will be paying 1% of 1 crore 20 lakh. So the turnover not only means taxable goods. Even if he is supplying exempt goods now, he has to pay 1% of that amount also. So for manufacturer, it is 1% of the turnover, aggregate turnover. But if we are talking about trader, then it is 1% of taxable turnover. Okay, listen very carefully. This is very basic, that a manufacturer can produce 1 or 2 or 3 type of product in a factory, in his factory. 1, maybe 2, maybe 3 different types of product he can produce in his factory. But a trader, a grocery trader, a provisional store, a departmental store can sell thousands of product in his shop, in his store. So he says that, sir, I am having 50% turnover of taxable supply and having 50% turnover of exempt supply, and government is saying me to pay 1% of the total turnover. No, I'm not going to pay 1% of the total turnover. Trader will not avail this scheme, because as a grocery trader, as a medical store, as a departmental store, I am supplying a lot of exempt item also. So a person who is supplying a lot of exempt item also will not be easily paying tax on that exempt goods also. And therefore, government has amended the second point, and they says if you are a trader, then you have to pay 1% of the taxable supply. If you are a trader, then you have to pay 1% of the taxable supply, not 1% of the total turnover. So a trader will be paying only on his taxable supply, not on the total turnover. That is very important to watch here, that we are going to pay only 1% of the taxable turnover. Okay. Third point is restaurant. Restaurant is also going to pay 2.5 plus 2.5% of the turnover of the current year. Now again, this is turnover. There is no taxable turnover here. So restaurant is going to pay on the turnover. The problem is with the trader only because trader is doing business of multiple goods. Half of them may be exempt, half of them may be taxable. So trader is not ready to pay 1% of the total turnover. This problem is not with the manufacturer, not with the restaurant, because manufacturer restaurant is not doing business in a very multiple business. They are doing manufacturing of 1 or 2 items only, but trader is selling hundreds of items in his shop. So it is not possible for trader to pay 1% of the total turnover, and that's why government amended only this trader point, that trader can pay 1% of the taxable turnover, but manufacturer and restaurant is going to pay 1% of the turnover of the current year. Restaurant can pay 5% of the turnover, and other service provider, that is the limit was 50 lakh rupees. Other service provider, the rate of tax is 6%, 3% CGST, 3% SGST. So this is very important. These are the rates of composition scheme. What are the rates? There are 4 different rates for 4 different type of person. If you are a manufacturer, then 1% of the total turnover. If you are a trader, then 1% of the taxable turnover. If you are a restaurant, then it is 5% of the turnover of the current turnover again. And if you are other service provider, then it is 6% of the turnover. So the tax rates are very easy. It's 1%, 1%, 5%, and 6%. 1% for manufacturer, 1% for trader, 5% for restaurant, and 6% on the other service providers. Okay, I think you are getting all the rates. You are getting all the rates. Okay, nice, very nice. So have you remembered all the rates? Do you remember all the rates? 1%, 1%, 5%, and 6%. The difference is trader is going to pay 1% of the taxable turnover. Manufacturer is going to pay 1% of the total turnover. Okay, let's move on to another example of that. I am showing you an example. First of all, the example is Mr. X is a registered person in Delhi and he has the following turnover in 21-22. First of all, turnover of 21-22. 21-22 is basically the previous year. The turnover of previous year is given. Turnover of taxable supply, including GST of 12% is 75 lakh. Turnover of exempt supply is 10 lakh. Interest income is 5 lakh, and turnover of taxable supply, inclusive of GST of 18% is 8 lakh. So first of all, for the previous year, we have to calculate aggregate turnover. And while calculating aggregate turnover, everybody should know that we are going to exclude tax. So what we will do? First of all, when we are calculating turnover of taxable supply, we will divide 75 lakh divided by 112 because it includes tax. So we have to divide and exclude tax. So 75 lakh divided by 112 into 100, that will be the turnover of taxable supply. Then 10 lakh is already exempt, so no tax is included. We are not going to include interest income in that, so just exclude interest income. And turnover of taxable supply of services 8 lakh divided by 118% into 100. So this will be around 6 lakh around is the turnover of the services. So 75 lakh divided by 112 into 100, 10 lakh plus 8 lakh divided by 118 into 100. That will be the aggregate turnover of the previous year. So can you show us what is the answer? Actually the turnover, then the turnover I think is 83,74,393. First check that in this question, our aggregate turnover is 83,74,393. Again, I am showing you that 75 lakh is divided by 112 into 100. 75 lakh is divided by 112 into 100. Then turnover of exempt supply, that is 10 lakh. We will not include interest income. And then there is a turnover of taxable supply and it is also included. So we have to divide it by 118 into 100. So what is my taxable what is my aggregate turnover? My aggregate turnover is 83,74,393. This is my aggregate turnover. My aggregate turnover is 83,74,393. I think you have reached to the aggregate turnover. Now the question further says that if we are eligible for composition scheme, of course a person is eligible because he is registered person in Delhi. He is registered person in Delhi and is supplying goods. So of course he is eligible for composition scheme. Now we are assuming that he is eligible for composition scheme because his turnover is not not increasing not more than 1.5 CR. Now for 20 to 23, these are the details of the turnover. For 20 to 23, these are the details of the turnover. His current year's turnover is 95 lakh of the taxable supply. His exempt supply turnover is 10 lakh and his taxable services turnover is 6 lakh. Calculate whether Mr. X is eligible to claim composition scheme. Yes, Mr. X is eligible to claim composition scheme because his turnover is not more than 1.5 CR. Now we have to also calculate the tax payable under section 10. Now we have to calculate how much tax he is going to pay on the turnover of 22-23. Okay, from 21-22, we have arrived that he is eligible for composition scheme for 22-23. Now the details of 22-23 is given. Now we have to say, we have to calculate whether how much tax he is going to pay on this turnover. So now we have three turnovers. Turnover of taxable supply of goods, 95 lakh. Turnover of exempt supply, 10 lakh, and turnover of taxable service, 6 lakh. Interesting thing is, there are two cases given in the question. If Mr. X is a manufacturer and if Mr. X is a trader, I am giving you 1 minute. Try to calculate what will be his tax payable if he is a manufacturer and what will be his tax payable if he is a trader. Try to calculate. I am giving you 1 minute for that. Try to calculate what will be his tax payable if he is a manufacturer and what will be his tax payable if he is a trader. Try to calculate it. Try to calculate it. Okay, I think you have calculated the answer. We will see. Let's see. So we will see what is the answer. See, the aggregate turnover of the previous year is 83,74,393. That is already come. We have already discussed that. Now the point is Mr. X is eligible? Yes. Now they are saying that if Mr. X is a manufacturer, then he will be paying tax on taxable as well as tax exempt goods. So the turnover of taxable goods is 95 lakh. Turnover of exempt goods is 10 lakh and turnover of taxable service is 6 lakh. Total aggregate turnover is 1 crore 11 lakh rupees. So he is going to pay tax of 0.5 plus 0.5%. Yes, I have a lot of students have given the correct answer that he is going to pay tax on 1 crore 11 lakh rupees turnover. So on 1 crore 11 lakh, he is to pay CGST 0.5% and SGST 0.5%. So as a manufacturer, he will be paying 55,500 as CGST and 55,500 as SGST. That is 0.5% of 1 crore 11 lakh rupees. But sir, if he's a manufacturer, he is going to pay tax on all the turnover, including exempt. Okay. Now, what if he is a trader? If he is not a manufacturer, if he is a trader, then how much tax he's going to pay and what turnover he is going to pay. Now he is manufacturer here, so he's going to pay 1% on all the turnover. But if he is not a manufacturer, if he is a trader, then at what turnover he is going to pay tax? Let's see in the next slides. See. He is going to pay tax only on 1 crore 1 lakh rupees. If he is a trader, then turnover of taxable goods and turnover of taxable services only. He's not going to pay on turnover of exempt goods. So his tax will be 0.5% and 0.5% of 101 lakh means 1.101 crore rupees. He has to pay 0.5% and 0.5% of CGST and SGST. Okay. So I think you are getting the point. If he is a manufacturer, then we have to pay 1% on the total turnover. But if he is a trader, then we have to pay 1% only and only on the taxable turnover, not on the total turnover. So on 1 crore 1 lakh rupees, he is going to pay 0.5% CGST and 0.5% SGST. I think it is clear to everyone. Now you are getting all the answers. If he's a trader, he will be paying 50500 and 50500. If he's a manufacturer, then he will be paying 55500 and again 55500. So on that 10 lakh rupees, which is an exempt supply, manufacturer is going to pay 1%, but trader is not going to pay 1%. That is a very big difference between manufacturer and trader. I think now you are getting this calculation. Yes, very nice. Now we are talking about next important point. That is, sir, now we are getting all the calculations. We get that if he's a trader, he's going to pay 50,500 as well as 50,500. Next. Now a very important thing. Sir, what are the conditions of availing composition scheme? If a person is availing composition scheme, what are the conditions? Whether everybody can avail composition scheme? No, sir. There should be some terms and conditions. Then only a person can avail composition scheme. So, sir, what are the terms and conditions? These are very important. So listen very carefully. First of all, if you are, first of all, these are the list of person who is ineligible. I can write it down here. These are the list of the guys who are ineligible for availing composition scheme. These are the guys who are ineligible. Okay, so these are the guys who are ineligible for availing composition scheme. So conditions of availing composition scheme, first of all, who are ineligible. Who are the guys who are not eligible to avail composition scheme? Means this composition scheme is not for everyone. There are some guys who are ineligible for this composition scheme. And who is the first one? A person who is making interstate supply. If a person is making interstate supply, means if he's selling outside the state, he is not eligible to claim composition scheme. So a person who is selling outside the state cannot avail the composition scheme. Composition scheme is only for those guys who are selling local. Government does not want a guy to sell outside the state as a composition dealer. Why, sir? Because basically government is targeting local retailers. They are not targeting the wholesalers and the guys who are selling outside the state. So they have clearly said that if you want to sell outside the state, then you are not eligible for composition scheme. And that's why in the last slide where we have studied about the rate of tax, I have already shown you the rate of tax of CGST and SGST. I have not written anywhere the rate of IGST because a composition dealer cannot pay IGST. He can only sell in the same state where he is registered. He cannot sell outside the state. So first important thing is a person who is making any interstate supply cannot avail composition scheme. Are you getting my point? So a person who is making interstate supply cannot avail interstate, cannot avail composition scheme. Okay. Next one is person supplying through e-commerce operator. So this scheme is not for those dealers who are registered on Amazon or Flipkart. If a person is registered on Amazon and Flipkart, he cannot avail this scheme. This scheme is not for those guys who are actually registered on Amazon or Flipkart. This scheme is only for a retailer who is actually supplying in their local place at their local state. But if you are a registered dealer on Amazon, if you are a registered dealer on Flipkart, then of course you will be supplying outside the state also. It is not possible that you will be taking only local orders. Of course, you can take the orders from whole over India. Otherwise, anybody will register on Flipkart or Amazon if he doesn't want to sell outside the state. So the very first condition will breach if you are registered on Amazon or Flipkart. But the government has clearly said that if a person is supplying through Amazon or Flipkart, he is supplying through e-commerce operator, then he cannot avail composition scheme. So first of all, a composition person cannot make interstate sale. There is a question whether a composition person can make interstate purchase. Yes, of course. There is no problem in interstate purchases. The problem is with interstate sale. So you can purchase from anywhere in India, but you cannot sell outside state. You can only sell within the state. You can only sell local, You cannot sell outside the state, but you can purchase from outside the state. If you want to purchase, you can purchase from the outside the state, but you cannot sell outside the state. So the very first condition is the person who is selling outside the state cannot avail composition scheme. Second, the person who is supplying through e-commerce operator, a person who is supplying through Flipkart, a person is supplying through Amazon, he cannot avail composition scheme. Third condition is a casual taxable person, and fourth one is non-resident taxable person. Have you heard this name before? What is casual taxable person and what is non-resident taxable person? No, I just give you a very simple example to make it very easy. Listen carefully. There is an exhibition in Delhi, and a guy from Kerala also wants to participate in that exhibition. A guy from Kerala wants to participate in an exhibition in Delhi. Okay, so he went to Delhi and he participated in a exhibition in a flea market. There is a flea market in Delhi, and he wants to participate in the exhibition of flea market. And that flea market and exhibition will be for 15 days. So he will be selling goods in 15 days. He will be selling goods for 15 days in Delhi. Okay, and he is registered in Kerala. Okay, now he is selling goods. He is selling some local items of Kerala in Delhi exhibition. And now the Delhi tax officers come at his shop and they ask, you are collecting tax of which state? So the guy will say that I am registered in Kerala, so I will be collecting the tax of Kerala only. Delhi government will not allow you in Delhi to collect tax of Kerala. Delhi government will say this is wrong. You are selling at our place and you are charging CGST and SGST Kerala in your invoice. This is wrong. How a Kerala get a revenue if you are selling in our state? Consumer is in our state, you are selling goods in our state, the market is in Delhi, you are participating in the exhibition in Delhi and you are paying tax. And that temporary GST number is basically that guy who is availing this temporary GST number for participation in Delhi exhibition. He will be called casual taxable person. He will be called casual taxable person. Why we are saying that he is a casual taxable person? The point is he is a casual taxable person because he is not registered in Delhi. He is normally registered in Kerala, but he visited Delhi. He is in Delhi for only 15 to 20 days. He will be participating in an exhibition for only few days, and then he will be leaving Delhi and will be again returning to Kerala. So he needs a temporary GST number for selling goods in Delhi. And for that, he will be providing with a GST number which is temporary, and that guy will be called casual taxable person. Casual taxable person. So you are getting it. What is the meaning of casual taxable person? A person who does not have any business place in the state, but he is occasionally coming to the state for the business. He doesn't have any number in the state, in the Delhi state, but he is occasionally coming here for the business. Then he will be registered as a casual taxable person. He will apply for registration and he will get registration for few days only, like for 10 days, 15 days, 20 days, 30 days, 40 days. And after that, the registration will be automatically expired. So he will be providing with a GST number, which is actually temporary. And that guy is called casual taxable person. So then what is called NRTP? In the same exhibition, there is a guy from Germany also. He also participated in the same exhibition and he also brings some goods with him to Delhi in that exhibition. So there is a guy who came from Kerala and there is a guy who came from Germany. Both are selling goods in that flea market on that exhibition. The guy who came from Kerala will be called casual taxable person, and the guy who is coming from abroad to participate in the exhibition will be called non-resident taxable person. So there is a very simple definition. There is a simple difference between casual taxable person and non-resident taxable person. A guy who is coming from other state for participation in exhibition is called casual taxable person. A guy who is coming from abroad for participation in an exhibition will be called non-resident taxable person. So the difference is actually color of skin. If a guy is from Kerala, he is an Indian, we can say Gori Chamdi and Deshi Chamdi. Deshi Chamdi means Indian skin. So Indian skin will be called casual taxable person, and Gori Chamdi, that is white skin or maybe any other skin. Just I am talking about the guy who is not Indian resident. If he is here with a foreign passport to do any business in India for any temporary time period, and he will be participating in the exhibition for few days, he will be called non-resident taxable person. Okay, so there are two guys. One is from Kerala, he is also participating in that exhibition. One from abroad, he is also participating in that exhibition. One will be called casual taxable person and another will be called non-resident taxable person. Okay, so casual taxable person means a guy who is coming from another states for doing temporary business in our state. And non-resident taxable person is a guy who is coming from abroad for a temporary business in our state. That is called casual taxable person and non-resident taxable person. They cannot avail composition scheme. So a person who is a casual taxable person cannot avail any composition scheme. A person who is NRTP cannot avail any composition scheme. So these are the two guys who cannot avail composition scheme. So the person who is selling goods outside the state, a person who is registered on Amazon or Flipkart or any e-commerce site for selling goods or services. Third is CTP, that is called casual taxable person. Fourth is NRTP, that is called non-resident taxable person. So is there any other guy who cannot sell, who is ineligible? Yes. Fifth one is a person who is selling petrol and alcohol. So there is a restaurant. He is not only selling food, he is also selling alcohol. He is also selling alcohol. He is also selling beer. He is also selling wine. Whether he is eligible? No. A person who is supplying non-taxable goods cannot avail composition scheme. But sir, there is a confusion. While calculating aggregate turnover, you said that we will be including 80 also in our aggregate turnover. And now you are saying that a person who is supplying alcohol cannot avail composition scheme. Okay, so there is a confusion. Because while we were calculating 80 now, you have said that we will be adding alcohol turnover also. And now you are saying that if anybody is supplying alcohol, he cannot avail composition scheme. There's a difference. There, where we are calculating 80, we were calculating the turnover of the previous year. Let's take an example that he was having a bar license in the previous year and he was selling alcohol in the previous year. In his turnover, the turnover of the alcohol will also be included. But assume that from this year, he is not selling alcohol. His bar license got revoked. Now he is not going to sell alcohol. He is only selling food. Sir, whether he can avail composition? Now he can avail composition, because in the current year, when he is availing composition, he cannot sell alcohol. In the previous year, he can sell alcohol, but in the current year, when he is availing composition, he cannot sell alcohol. So the point what I am covering is, if he is selling alcohol in the previous year, there is no problem. But in the current year, when he has the avail composition scheme, after being a composition scheme, he cannot sell alcohol or petrol. After availing composition scheme, he cannot avail alcohol. He cannot sell alcohol or petrol. In the previous year, he can sell anything because he was a regular taxpayer in the previous year. But in the current year, he is not a regular taxpayer. So in the current year, he is a composition dealer. He cannot sell alcohol or petrol. So this is the fifth important condition. Some students are saying the screen is blank. We cannot see anything. Just wait for a second. I think it is visible from my side. Is there any problem? All the students are having this problem? No, everybody is saying that screen is proper. My voice is proper. So maybe the problem is from your side, beta, because nobody is complaining other than 1 or 2 students. I think maybe 1 student only. It is not from my side. Maybe it's your internet problem, because nobody other than a 1 student just said that there's a problem with the screen. He can't see a screen. That is not from my side, maybe from your side. Okay. Now, there is one more doubt. In case temporary business is done in my other state, which within India, he has come to sell in his product in any consumption state, temporary GST number is compulsory. Yes, of course. Yes, of course. If I am having a GST number in Madhya Pradesh and now I am selling the goods in Maharashtra, then of course I have to take a temporary GST number of Maharashtra for selling those goods. Yes, if I am going in that state and having a business place in that state, then of course I need a GST number of Maharashtra. If I am selling the goods directly from here only, then I don't need a temporary GST number of Maharashtra. But if I am participating in the exhibition in Maharashtra, I am setting up a shop in Maharashtra and selling from there, then I have to get a GST number from that state also. I have to get a temporary GST number. Okay. Okay. Sir, Assam is not in the state with 75 lakh limit. Yes, Assam is covered in 1.5 CR limit. Assam is not in 75 lakh limit. Getting it. Very nice. Now, what is the sixth ineligibility? We have already discussed the 5 guys who cannot avail this composition scheme. So what is the sixth ineligibility? What is the sixth ineligibility? Sixth one is this. A manufacturer of pan masala, tobacco, aerated water and ice cream is also ineligible. But listen carefully. I am talking about a manufacturer. I am talking about a manufacturer. So listen very carefully. If a person is trading in pan masala or if a person is trading in aerated water, sir, what is the meaning of aerated water? A water having an CO2 means we are talking about sodas, cold drinks and everything. So if a person is selling sodas and cold drinks, no problem. But if a person is manufacturing sodas and cold drink, then he cannot avail composition scheme. If a person is selling ice cream, no problem. If a person is manufacturing ice cream, then he cannot avail composition scheme. So composition scheme is for those guys who are not manufacturing pan masala, tobacco, aerated water and ice cream. If a person is a manufacturer of pan masala, tobacco, aerated water and ice cream, then he cannot avail composition scheme. So it's very easy. Tell me, how many guys are ineligible? There are total 6 guys who are ineligible. Tell me who are the 6 guys. First of all, a person who is making interstate supply is outside, he cannot avail composition scheme. Second, a person who is selling through Amazon or Flipkart from through a e-commerce operator, he cannot avail composition scheme. Third one is a casual taxable person and non-resident taxable person cannot avail composition scheme. Fifth one is a person who is manufacturing tobacco, pan masala, aerated water and ice cream. He cannot avail composition scheme. And one more is if he is selling alcohol and petrol in the current year, then of course he is not eligible to avail composition scheme. So this composition scheme is not for all these 6 guys. They are ineligible. They cannot avail this composition scheme. Okay, there is one doubt that can we take separate composition scheme under the different state? No, I will tell you later that there is one more condition. We will discuss it later. So I have already covered all the doubts. Like I have already covered manufacturer of pan masala Assam. I have already covered Assam wala doubt. Person availing composition scheme should not sell non-taxable goods. In case it's not, he will not come under the composition scheme, right? Yes, I have already covered that. If he's selling petrol, if he's selling alcohol, then he cannot avail composition scheme. So these are the 6 guys who are not gonna avail, who cannot avail composition scheme. So what is the difference between normal, regular taxpayer and composition scheme? That I will also cover that. I will also cover that. So what is the difference between normal guy and composition dealer? I will cover that. Now we are moving towards the next slide, and there are some more conditions. We have already discussed who are ineligible. I have already covered that. Who are ineligible, who cannot avail composition scheme. Now I'm going to talk about other conditions that a composition dealer has to follow. Then only he will get composition scheme. Sir, what are the conditions? Please tell us. The very first condition is, okay, you can see that for a manufacturer, for a trader, for a service provider, the rate of GST is only 1%, 1%, 5% and 6%. Rate of GST is very low because government clearly said that no input tax credit. If you are purchasing anything for rupees 100 and you have paid 12% GST, then that 12 rupees will also become the part of the cost. You cannot avail input tax credit if you are a composition dealer. You cannot avail ITC if you are a composition dealer. Yes, you cannot avail input tax credit if you are a composition dealer. So some of the students were asking me, sir, whether ITC is available to composition dealer or not. No, a person who is composition dealer doesn't have any, cannot avail any ITC. So there will be cascading effect. That's why the government has reduced the rate to 1% only. The rate of composition scheme is very low only because this is the condition that you cannot avail any ITC. That's why the rate of tax is very low. That's why the rate of tax is very low, because a person who is availing composition scheme cannot claim any input tax credit. Very nice. Next, a composition person cannot collect tax from the customer. One more thing is, even the 1% that he has to pay now, he has to pay from his own pocket. Like if I am selling the goods for rupees 100, then I cannot make a tax invoice. And I cannot make an invoice in which I will show that my price is 100 and my tax is 1%. So it is 101, give me 101. No, it is not possible. If you are a composition person, then you have to collect only price. You cannot collect tax or from the customer. So the customer will not see any tax in the bill. He will see just price of the goods is 100 rupees. So if you want to collect tax from the customer, you cannot collect separately. You have to add in its price only. Like if you want a revenue of rupees 100, if you want a net revenue of rupees 100 and you know I have to pay 1 rupee tax, then please collect price. Please mention price to the customer 101 rupees, because government will not allow you to collect tax separately from the customer. So like a very simple thing, I have a client, he is a composition dealer. What he always does is, he says that my turnover is rupees 1 lakh, sir. My turnover is 1 lakh. So what I normally do, I type the 1 lakh rupees turnover on the calculator and I say 0.5% CGST, 0.5% HGST. So you have to pay 0.5%, that is on 1 lakh turnover, you have to pay 500 rupees CGST and 500 rupees HGST from your own pocket. Means it's an expense for a trader. It's an expense from him for a manufacturer. He cannot collect the 1,000 rupees from the customer. He said that, sir, I have a turnover of rupees 1 lakh. I have sold goods of rupees 1 lakh and I have to pay 1,000 rupees from my own pocket. So his net turnover would be 99,000, because he cannot collect tax separately from the customer. He cannot collect tax separately from the customer. Okay. In composition scheme, major benefits snatched by government, sir, ever after low tax rate, if it is profitable to a composition scheme. Actually, whether it is profitable, whether the composition scheme is profitable or not, that we will discuss in our example. I have given an example. In that example, I will compare. I will show you a comparison between a regular taxpayer and a composition dealer. Like if he is a regular taxpayer, how much profit he is going to earn. If he is a composition dealer, then how much profit he is going to earn. That I will cover in our today's session only. So you will be getting very easily that whether composition scheme is beneficial or regular scheme is more beneficial. That we will cover in our examples. Okay. Next is, how do we know that as a customer the trader is under the composition scheme? I will tell you. Just wait for a few minutes. You will get how. Sir, all the 6 conditions that you have discussed in the last slide, is it for current year? Yes. Because after being a composition person, you cannot do all such kind of thing. You have to, it's more like, have you seen any arranged marriage proposals or any in any relationship? If they are having a independent thought, a boy and a girl is having an independent thought. They are very independent. They are very frank. So a girl met to a boy and asked him that, do you have any past? Boy said, yeah, I have a past. I have a lot of girlfriend in the past. The girl might say that I don't care about your past. I don't care about your past. Just now I am with you now. Don't cheat on me. So it's more like same here. Government is saying what you have done in the past year, we don't care. If your turnover is less than 1.5 CR, we don't care whether you have sold outside the state, where you have sold through e-commerce operator, where you were CTP in the last year. We don't care. Just after being a composition person, you cannot cheat on us. So after being a composition person, you cannot be in that 6 points. You cannot do any business which was covered in that 6 point. So they don't have any problem with the previous year, but they are saying that if you have availed the composition scheme, now you cannot do all such kind of business. So you were regular taxpayer last year, you can do interstate supply, you can do anything. But in the current year, you cannot do all such kind of thing because now you are a composition dealer. Getting it? So a girl a past doesn't matter to a girl. What matters is you can't cheat when you are with her. Now you are with her, now you are committed, you can't cheat. What you did in the past doesn't matter. Is it true? Actually, is it happened to any of you guys that a girl says, I don't care about past? This is very rare. A girl always think about the past, and girl always, I don't want to anything. I have a bad experience with that. Okay. So the point is, uh, the same thing is applicable here. If a girl is saying that if government is saying we don't care what you have already done in the past year, the point is we just want to comply all these conditions for the current year only. Current year. Okay. Now moving towards the other conditions. First one is a composition dealer cannot claim any input tax credit. No ITC. A composition dealer cannot avail ITC. A composition dealer cannot avail ITC. Okay, I'm not audible to you. You can't hear me. I'm not audible. आवाज नहीं आ रही है. I'm not audible. Hello. I'm not audible. I think I'm audible. Voice is not coming. Voice is not coming yet. Voice is not coming. I can check. Hello. 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 Can you hear me? Nobody can hear me. Means there is a problem with my voice. Just wait for a second. But this is voice is proper from this side only. I'm not getting what is the problem. Hello. Hello. I can just take some settings. Hello. 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 I think you can hear my voice because in the screen it is showing that my voice is proper. So visible, but can you all hear me? Please let me know. Can you all hear me properly now? Because I can't start class if you are not. Screen is visible, of course visible, but can you hear me? Can you all hear my voice? Voice. Are you getting my voice? Are you all getting my voice? Yes, now voice is proper. Yes, now I'm audible. Okay. Okay, now I'm audible. Means the problem is not from my side. I don't know. The problem is from the student side. Yeah, I'm audible now. It's audible. Nice. So what I was talking is a person who is a composition dealer, first of all, he cannot avail any input tax credit. He cannot avail ITC. Second thing is, a person who is a composition dealer cannot collect any tax from the customer. So he cannot issue any taxable invoice. Now it's a big deal. It's a big problem. You know what is a big problem? The problem is that if a person cannot issue taxable invoice, if a person cannot issue taxable invoice, and if he cannot collect tax from the customer, next person will not get any ITC. So if I am collecting 100 rupees from the customer now, that would be only in one mode, that is price. I cannot collect anything other than price. So next person will not get any input tax rate of that 1% also. I have to pay this 1% from my pocket, and the next person will not get any ITC of that invoice also. So they, if we can see, the composition dealer is a very bad conductor of credit. First of all, he cannot claim any credit on the purchase, and even when he is issuing invoice to the next person, he cannot collect tax from the customer. So next person will also not get any ITC. So he is like blocking the chain of credit. So I always suggest that please avail composition scheme only when you are selling it to the consumer. Consumer does not care about input tax rate. Consumer does not want any ITC. But if you are selling it to any other registered person, if you are selling B2B, if you remember, there are two types of transaction. First one is called B2B and second one is called B2C. If you are selling B2C, then there is no problem because consumer does not want any ITC on the tax. They don't care about what invoice they are getting, whether they are getting taxable invoice, they are getting tax invoice, or they are getting bill of supply that is without tax invoice. They don't care about that. They just want the total price should be less. But if there is a B2B buyer, means the next buyer is also registered and he wants to claim credit, then he will not buy from a composition dealer because composition dealer can't issue taxable invoice to his customer. He cannot collect tax separately from the customer, so the next guy cannot get any credit from the that composition person. I have a very good example for that. One of my assistant, I sent him for buying some pen drives. For some pen drive lectures, I just need some pen drives, and I just sent him to a shop who is a registered person and who is a regular taxpayer. He always issue invoice in my name, and I got credit of all the pen drives I bought. But I sent my assistant to his shop. His shop was actually closed on that day. So my assistant buys pen drive from the shop which was opposite of that shop. Means from the opposite street, there was another shop. My assistant bought all the pen drives from that place only. And when he arrives, he was very happy. He said, "Sir, I got that pen drive cheap. From the guy you were saying now, the pen drive costs around rupees 400, and here I got your pen drive for rupees 380 only, so I got a discount of rupees 20 per pen drive." I said, "Wow, show me the invoice." Shit, when I saw the invoice is of composition person. So out of 380, the whole amount is only price. There was no tax. Whereas when I was buying from the older guy now, he was showing me the price of rupees 350 and tax of rupees 50, and I got that credit of rupees 50 from the invoice. But now I got a bill of a composition dealer on which the price written is 380. There was no separate tax component. Now the cost of my pen drive is 380. However, if I was buying from the old shop now, I was getting it at a cost of 350 because the 50 rupees tax I can get it. I was availing credit. But now when I'm buying from a composition dealer, I cannot avail credit. So cost of my pen drive will be higher. So my assistant was happy, but I was not happy because he doesn't know that a bill from a composition dealer doesn't get us ITC. So even if I am getting it for 380 rupees, it is a loss for me. The point is, a person who is a consumer will always prefer to buy from a composition dealer. But if a person who also want credit will not buy from the composition dealer because composition dealer cannot charge a tax separately. Okay. Now, third condition is he has to mention in his invoice as well as in his signboard that he is a composition dealer. It is also very interesting. Why it is interesting? Because he has to mention in his invoice and signboard that he is a composition dealer. Why? So that customer always knows that he is a composition dealer, and he cannot collect tax from us. Otherwise, what the dealers are doing is they are collecting 12% or 18% GST from the customer and paying government only 1%. And they are collecting tax and generating profit from that tax only. So government has made a very simple rule that if you are a composition dealer, you have to put on a signboard that I am a composition dealer and I am not eligible to collect any tax separately. Even I once fought to a restaurant for this. That restaurant was collecting GST and it was written that he is a composition dealer. I fought for that GST and I clearly told him, you cannot collect GST from us. Because you are a composition dealer, you have to pay that 5% or 1% GST from your own pocket. You cannot collect GST from us because you are a composition dealer. So a composition dealer cannot collect tax from the from customer, and that's why he has to mention in his invoice and signboard that he is a composition dealer and he cannot tax collect from the customer. A student was asking me how we are able to know that whether a person is a composition dealer or not. You can see in his invoice, in his signboard, he has to write it that he is a composition dealer in his invoice also. Nice. There is a question, sir. ITC is not available to supplier and customer under composition scheme. Yes, composition dealer is a very bad conductor of ITC. A ITC cannot pass through composition dealer. So first of all, he cannot avail ITC, and even the buyer, who is the next person, cannot avail ITC on the bill of composition dealer. So this is the problem. So this scheme is actually successful in B2C transaction, not in B2B transaction. Business to consumer transaction, this scheme is successful, but not in case of business to business transaction. Okay. Yes, able to. Okay, everything is fine. I am covering all the doubts with the lecture only. Parallelly, I am solving all the doubts also. Okay, so this is the third condition. Now we have fourth condition for the composition scheme, and it is also very interesting. Composition scheme can be availed only on pan-India basis. It means if I am having two branches, first of all, turnover of both the branches should be clubbed for assessing the eligibility. It means like if I am having a branch in Indore and in Madhya Pradesh and I am having another branch in Maharashtra, the turnover of both the branch should not exceed 1.5 CR limit. So first of all, the aggregate turnover, what we are calculating should be on pan-India basis, not only on branch basis or state basis. This composition scheme is not for a branch, it is for a person. So if a person is having two branches, one in Bangalore and one in Maharashtra, then his turnover of both the branch should be included while calculating aggregate turnover. Getting it? Second thing, if a person is having two branches, he is asking department that I want composition scheme for my Bangalore branch, but I don't want composition scheme for my Mumbai branch. Is it possible? No. A person who is availing composition scheme should avail composition scheme for whole India, for all the branches in India. He cannot do like that. What? He cannot avail composition scheme for one branch and he cannot be regular taxpayer for another branch. Government is saying, I am making a person a composition dealer, not a branch. So a person means a person who is having 3 or 4 branches. He wants to avail composition scheme in Assam, but he does not want to have composition scheme for other states. It is not possible. Even if you are having separate registration number, you are doing business for same PAN. Your PAN is same. So you are a one person having multiple branches in multiple states. Is it possible to avail composition scheme in one branch and not in another branch? Not possible. You have to avail composition scheme in all branches. Otherwise, it will not be available anywhere. So it means it can be availed either for all or none for anybody. So either you have to avail this scheme for all the branches, and even if the one branch is ineligible, if even in the branch you are doing interstate supply, and if you are ineligible, you cannot avail composition scheme anywhere in India. So for availing a composition scheme in India, you have to avail it for all the branches in India. You cannot do like that you are availing composition scheme in one state and you don't want to avail composition scheme in another state. If you want to avail composition scheme, you have to avail in each and every state where you are having business, where you are having branches. Okay. Sir, if a person has 2 branches in the same state, then he is also do GST number. It is not compulsory. A person having 2 branches in the same state can work from one GST. It is optional for him to get separate registration. It is optional. It is not compulsory. Sir, boarding and lodging of restaurant covered under composition scheme? No. If you are providing accommodation services and you are providing restaurant services and it's a component supply, then it will be treated as accommodation services, not restaurant services. If you are providing both, then you cannot avail composition scheme because it will be covered under other services. That is 50 lakh limit. You cannot register as a restaurant. You can register in composition scheme as a other service provider where the limit is only 50 lakh rupees. Yes. Next. Now one more thing. We have covered all the conditions. What are the 4 conditions? I have covered these 4 conditions. What are the conditions? First one, a composition dealer cannot avail any ITC. Second thing, a composition dealer cannot collect any tax from the customer. He cannot issue taxable invoice. He has to issue bill of supply. Third thing is a composition dealer has to put on signboard and invoice that he is a composition dealer and he is not eligible to collect any tax. Fourth thing is he cannot avail composition scheme for one branch and be a regular taxpayer for another branch. If he want to avail composition scheme, he has to avail for all the branches. You are getting all the 4 conditions. Now we can go for a comparison. One of the student is asking me, sir, please compare between a composition dealer and a regular taxpayer. So I have given a very simple example to compare between composition dealer and a regular taxpayer. So listen very carefully. If you are a guy is purchasing goods for rupees 1 lakh and paying GST of rupees 12%. So his total turnover is 1 lakh 12,000. His total purchase is 1 lakh 12,000 including GST. So his turnover is 1 lakh and the rate of GST is 12%. Now he's selling that goods for a MRP of rupees 150 lakh and it is including GST of rupees 12%. Means his MRP is 150 and the rate of tax is 12% on sales also. First of all, in this example, we will assume that he is selling it to the consumer. So whether he is under composition scheme, whether he is under the regular taxpayer, he will not change his MRP. He will not change his MRP. He will sell the goods for rupees 150. It does not matter whether he is a regular taxpayer or he is a composition dealer. A consumer does not think whether he is a regular taxpayer or composition dealer. What matters to the consumer is only the price. If the price is 150, then it is same even if you are regular, even if you are composition dealer, that we are assuming here. Okay. Now what we can do is we can create a comparison here. Okay. So I can create a comparison. Listen carefully. I am comparing the 2 situations. If he is a regular taxpayer, listen very carefully. We will fulfill all the conditions. We'll compare what is more beneficial. Listen carefully. Now this is very interesting example. Listen. If anybody is a regular taxpayer, okay, he is a regular taxpayer, then he will not be availing ITC. So his purchase will be 1,12,000. Sorry, he is a regular taxpayer. He will be availing ITC. Sorry, he will be availing ITC. So his purchase is rupees 1 lakh and he will be claiming ITC of rupees 12,000. So his purchase is 1 lakh and he will be claiming ITC of rupees 12,000. Now what would be his sale price? Okay, his MRP was 150. So his sale price would be 1,50,000 divided by 112 into 100. I can calculate it. 150 divided by 112 into 100. It's 1,50,000 divided by 112 into 100. The net sales is 1,33,928. And what is the GST amount? Rest is the GST amount. Out of 150, 133 is the, so the GST amount is 16071. He will collect 1,50,000 from the customer, but the gross amount is 150. Out of it, sale price is 1,33,928 and the GST amount is 16,071. Now what he will do? he will pay GST of rupees 1607, out of which he will adjust ITC of rupees 12,000, and he will pay 4071 in cash. Okay. First of all, I have told you earlier also that a dealer cannot earn anything out of GST. So he will be collecting 16,000. He has already paid 12,000. He will pay remaining 4071. There is no burden of any tax on this particular supplier. But he is earning, now he is earning profit of rupees 33,928. So what is his profit? If he is a regular tax person, he is a regular dealer, he will be earning a profit of rupees 33,928. This is his profit. How much is profit? His profit is 33,928. Again, I am showing why it is 33,928. The reason is that sales is 150, but this is inclusive. So we are dividing it by 112. And now the profit is 33,928 rupees if he is a regular taxpayer. Now we are assuming that he is not a regular taxpayer. Now he wants to be, if he is doing the same transaction in a composition scheme, what will be his profit? If he is under composition scheme, okay. If he is under composition scheme, then his purchase will be 1,12,000. He will not get any input tax credit, so he has to record his purchase cost as 1,12,000. He has to record his purchase cost at rupees 1,12,000. And now he will be selling at the same price. I am not changing the price. His sales will be 1,50,000 rupees. I am not changing the price. I am just saying that he will be selling the same goods to the consumer at same price, because consumer does not consider whether he is collecting tax or he is collecting price. Total invoice should be same. So even in the regular scheme, the consumer has to pay 150, and even in the composition scheme, consumer has to pay 150. So he's paying 1,50,000. He is collecting 150 from the customer. Okay. Now the point is, he will pay GST of 1% from his pocket. So out of 150, 1,500 he will pay as a tax. So what would be his net sales after paying GST? After paying GST, his net sales would be 1,48,500. He has to pay 1,500 from his pocket. So he has collected 1,50,000 from the customer, and now he is paying 1% as 1,500 as a tax from his sales. So how much left with him? 148,500. And what is his purchase cost? 1,12,000. So what will be his profit? If we can see, his profit is 36,500. His profit is 36,500. You can see, without change in his price, without charging extra money from the customer, he is just switching from regular scheme to composition scheme, and he is earning higher profits. He is earning 36,500 as his profit. However, in the regular tax scheme, he was earning 33,928 as his profit. So that is the difference in composition scheme and regular scheme. In regular scheme, he was availing credit, but he was also paying tax. So his net sales is 1,33,000 and out his purchase is 1 lakh. So he was earning 33,928 as his profit. But now in the second case, he will not collect tax separately. He will be charging the same price as he was charging before. Out of 1,50,000, he will be paying 1%, that is 1,500 tax from his own pocket. So he will be remaining, he will be left with 1,48,000 in his pocket, and his purchase cost is 1,12,000. So the rest 36,500 is his profit. You can see, without changing the price, he is earning higher in the composition scheme as compared to the regular scheme. That is the benefit of composition scheme, because of the low tax rate and because of the simplicity of the scheme. First of all, he does not have to avail any credit. He does not have to collect tax from the customer. He just have to purchase and sell. He will be paying tax from his own pocket only. So he is purchasing for rupees 112. He is selling it for rupees 150. So his profit was 38,000. Out of his 38,000 profit, he has paid GST of rupees 1500. So his net profit is 36,500. Now you can compare what is more beneficial. Of course, in this scheme, composition is more beneficial because he is earning higher profit in case of composition scheme as compared to the regular taxpayer. He is earning higher side of profits. You can see easily he is earning higher profit in a composition scheme as compared to regular taxpayer. His profit is 36,500 in the composition scheme. Okay. Getting it? Okay. Sir, can you please tell the tax rate on gold? On gold, the rate of tax is 3%. On gold, the rate of tax is 3%. So this is the comparison between regular taxpayer and a composition taxpayer. There is one more example. This example is actually given in your module. This example is actually in your module. I have taken the screenshot from the module for this example. I can read this example. This is 106 example from your module. Sir, where did you get this module? I have downloaded this module from your website only. From ICMAI, I got this module. And in this module, I have an example in this chapter, example 106. In this example, you can see in this example, there is one doubt. Sir, if the tax is added to the invoice of the consumer by composition scheme, then how can the authority can know about it? Actually, authority can't know about it because the authority can't see each and every invoice of the composition dealer. That's why authority make a rule to write it down in your invoice that you are not eligible to collect tax from the customer. You have to write it in the bill that I am a composition dealer and I can't collect any tax from the customer. So customer can read it in his invoice, then he is not eligible to collect any tax. So if he is collecting that tax, you can fight for that. You can say that you are saying that you will not collect tax and now you are collecting the tax. So you are doing wrong. You can say it to the dealer. Now, example 106 says, Hotel King Private Limited is a registered person under GST and the previous turnover is 100 lakhs. So his previous turnover is not more than 1.5 CR. He can avail composition scheme. His normal rate of GST is 18%. His normal rate of GST is 18%. And his input cost is 7,18,000 exclusive of GST. So 780 plus 18% GST. His profit charge is 40% on cost. Find the invoice price and advise the best option to pay tax. So there are two options. First, he can avail composition scheme because his turnover is not more than 1.5 crores. So of course, he can avail composition scheme. It's in Hotel King Private Limited. So the rate of GST is 5%. He is basically a restaurant. Hotel King name suggests that he is a restaurant. So the rate of GST in composition scheme is 5%. Okay, one question from a student that in comparison scheme, how much amount is collected from the customer in this example? 1,50,000. In both the example, the customer has paid us 1,50,000. Okay. Sir, can trader avail a scheme if he's trading pan masala? Traders are allowed to sell pan masala, tobacco and ice cream. Who is banned? Manufacturer of tobacco and ice cream and pan masala is banned. Traders are allowed. Yes. So tax amount is included in MRP. Dekho, it doesn't matter that how much you are quoting MRP. So even if you are not saying the tax account, you are charging the same. You are saying that it doesn't matter to the consumer that whether he is paying for tax or for the price. So I am assuming that a composition dealer will not change the price. Then only we can compare, na? If you are changing the price, then how can we compare the two schemes? We are saying that I am selling it for 150 in any case. Then we are comparing that where the profitability is higher. Okay, now listen in this question. The cost of input is 780. So first we will discuss composition levy. Look at the composition part. In composition part, 780 is the input cost. He is paying 18% GST in his purchase and a composition dealer cannot avail ITC. So his cost will be 9,20,400. You all are very good student of cost accounting. You are like experts of cost accounting. So I don't have to explain to you that what is the total cost. So his cost of input is 780 and he is paying GST of 18%. He cannot avail ITC. So his total cost is 920,400. The question is saying you have to charge 40% profit on the cost. So his profit margin is 40% and his invoice price is 128,560. So this is his sale price. He will be charging from customer 1288560 and he will be paying 2.5%, on this 1288560. So out of 1288560, 0.5 and 0.5 CGST and SGST. So total GST he will be paying from his own pocket is 64,428. Sir, can you tell me what will be his net profit? If the question says calculate net profit, then he was charging profit of 368,160. Out of that, he will be paying tax of rupees 64,428. So 368,180 is profit minus 64,428 he will be paying. His net profit will be 3,03,752. He will be paying net. He will be receiving a net profit of 3,03,752 in the composition scheme. If he is a regular taxpayer, his input cost will be 780. His input cost will be 780. He will avail ITC, so it will not be included in the part of cost. His total cost is 780. He will be charging 40% margin. So his margin is 3,12,000 and his GST amount is 780 plus 312. 780 plus 3,12,000 is total sales is 1092. 18% of 1092 is 1,96,560, out of which he will pay credit and remaining cash. The main point is his profit margin is 3,12,000. His profit margin is 3,12,000. From 312 he doesn't have to pay anything. From this 3,12,000 he doesn't have to pay anything. Why he doesn't have to pay anything? The reason is very simple, because he has already collected GST from customers separately. So he will not be paying anything. So here in composition scheme, he is earning a net profit of 3,03,000 and in regular scheme, he is earning a net profit of 3,12,000. So in this case, regular scheme is beneficial. Regular scheme is beneficial. He is earning higher profits in regular scheme rather than composition scheme. In composition scheme, his net profit is 3,03,000. However, in regular scheme, his profit is 3,12,000. You know all the calculations. You are a cost student. You know how to calculate cost. You know how to calculate price. So here the profit margin is higher in regular scheme rather than in composition scheme. His profit margin in regular scheme is 312. However, his profit margin in composition scheme is only 3,03,000. So higher profitability in regular scheme as compared to composition scheme. Okay, I think you all got this example. This is an example from your module only. You can also read it from your module. It is example number 106 from this chapter only. Okay, moving towards the next slide. Now interesting is what is the procedure, sir? Now we are getting that who can avail composition scheme, who cannot avail composition scheme, what are the terms and conditions of availing composition scheme. We have already covered the example how to calculate aggregate turnover. We have already covered the examples how to calculate tax liability for a person if he is a manufacturer, if he is a trader. We have covered a lot of example. Now the last point in this composition scheme is, sir, what is the procedure? Who can avail this composition scheme? What is the procedure of availing this composition scheme? So first of all, I am telling you how we can opt in for composition scheme. Means a guy can avail composition scheme. How he can avail composition scheme? Sir, we get that composition scheme is very good. There is if we are comparing it, we are getting higher profitability in case of composition scheme. Then sir, how I can get in this composition scheme? There are 3 points. If you were registered in old tax regime, means when you were registered in 2016 in the older tax regime, you can avail composition scheme from 1st July 2017 only, but now this is not relevant. In module, it was written that if you were registered in the old tax regime, you can apply for a composition scheme from 1st July 2017. Now this is not relevant because now we are in 2021. And this provision was actually relevant in 2017 when we were registered in old tax regime. Now this transition provision is not useful in 2021. So in module, it is also written that a person who was registered in old tax regime, how he will register in the new tax regime. We don't have to cover that. Why? Because now this is not relevant. We are in 2021. This provision was only applicable for 2017. So now this is not relevant. So then what is relevant? The 2 options. Department will ask you whether you are already registered or whether you are applying for new registration. Means you are already a regular taxpayer. You want to switch over from regular to composition? Oh no sir, no sir, no sir, no sir. I am not a regular taxpayer. I am not a taxpayer. I am first, I am a new registered person. I am registering now. My turnover is have crossed 40 lakh in the current year only, and now I want a new registration. Department is saying, okay, you are applying for a new registration. You are filing a form for applying for new registration. Yes, sir. I am telling you the form number. If you want to apply for a new registration in GST, you have to fill a form, and that form is called REG01. In that form only, there is an option to avail composition scheme. Means when you are applying for a new GST number now, you can avail that option for opting for composition scheme. In registration application only, you then don't have to file any other form. Okay, so if I am applying for a new registration, I will opt in from the registration date only. I will directly go to the composition scheme from the very first day. Government will not, in registration application only, I will opt in for composition scheme, and I will just click a button when I am applying for registration, and you will be a composition person from the first day only. And this option can be availed any time of the year, means right now. If I am applying for a new GST number, I can apply for composition scheme from the same date only. But the point is with the person who are already registered. They are switching over from being a regular person to composition dealer. They were already registered as a regular person, and now they are converting themselves into composition scheme. First of all, switch over is only possible from the beginning of the financial year. You cannot switch from a regular person to composition scheme at any point of the year. However, if you are newly registered, you can switch, you can be a composition dealer from any point when you are getting registered. But if you are already registered, you are not applying for GST number, you already have GST number. You just want to convert yourself from composition regular to composition, then first and the foremost thing is you can opt in only from the beginning of the financial year. Means I just find out that the composition scheme is very beneficial for my parents. I called my CA and tell him that, sir, can we avail composition scheme? He will say, sir, we have to wait for 1st April. You can switch over from regular scheme to composition scheme only at the beginning of the year. You cannot switch. You cannot switch from regular to composition in the mid of the year. You can switch only at the beginning of the year. And for that, you have to file a form. Sir, what is the name of the form? Form number is called CMP02, and it should be filed prior to the commencement of financial year. This form should be filed prior to the commencement of financial year. And what is the name of the form? CMP02. For example, we want to opt in for composition scheme from the 1st April 2022. So I can file this form in March 2022 only, that I want to opt in for composition from April 22. So I will file the form from March 22 only, that I want to opt in from April 22. And for that, I have to file a form. The name of the form is CMP02, and it should be filed prior to the commencement of financial year. It should be filed prior to the commencement of financial year. Okay. So switching over is possible only at the beginning of the financial year. What is the form number? Form number is CMP02, and it should be filed prior to the commencement of financial year. I think you all are getting it. Okay. So if you are applying for a new registration, you can apply from composition at any time of the year and only in REG01, that is the registration form. But if you are switching over from regular person to composition person, then you can only switch over from the beginning of the financial year. Only from the beginning of the financial year. This form opens for 1 month in March 2022. And in March 2022, you can avail composition scheme for April 22. Okay. What is the form number? CMP02, and it should be filed prior to the commencement of the financial year. Now, interesting thing. We got it that what is the form number for opt-in for composition scheme. But there is one more interesting fact that I have to cover it, and it is very interesting. Listen carefully. Listen carefully. There is an interesting fact that I have to cover. With this GST CMP02 form, okay, you are filing GST CMP02, that is called intimation for availing composition scheme. You have to file one more form, and that is called GST ITC03 form. Sir, what is this GST ITC03 form? This form is useful for reversal of input tax credit on stock. What government is saying, listen very carefully. Government is saying that you have purchased some goods pre-composition period. You have purchased some goods before availing composition scheme when you were regular taxpayer. So you have claimed input tax credit on that goods, and now those goods are remaining in your stock. So of course you will be selling it after you have availed composition scheme. So now when you are selling it, you will be paying tax only 1%, and you have availed GST of 18 credit of 18% or 12% on such goods. So please reverse it. You cannot avail ITC on that stock because you will be selling that stock after availing composition. So you will be paying only 1% on that stock. So we will not allow you to claim credit on that stock. So you have to reverse all the credit you have with you on the stock you are carrying after availing composition scheme. So on 1st April, how much stock you have? Sir, I have a stock of rupees 2 lakh and I have claimed a credit of rupees 24,000 on the stack. Now you have to reverse. You have to pay that credit again to the government, because now that stock will be selling after availing composition scheme. So you will be paying only 1% on that stock. So you cannot avail input tax rate on that stock. So government is saying, if you are switching over, from regular to composition, you have to reverse. You have to reverse credit on the stock. You cannot claim credit on the stock. And for this, you have to file a form that is called GST ITC03 within 60 days from the beginning of financial year. Means from 1st April, you will get 60 days to reverse your credit. And for that, you have to file a form. That form is called ITC03. Okay, so there are two forms. First, you have to fill a form CMP02, that is for the intimation for availing composition scheme. And second, you have to file ITC03, that is for reversal of input tax credit. Okay, these all are the forms for availing composition scheme. Okay, now we are moving towards what are the forms for opting out of composition scheme. If a person wants to opt out a composition scheme, what are the forms that we have to cover? Okay. A person wants to opt out. First of all, he can opt out voluntarily. Second, he can opt out if turnover in current year exceeds threshold limit. He can also opt out if he is breaching of any condition. He is supplying goods interstate. He wants to register on Amazon. So if he is breaching any condition, or if the turnover is exceeding the threshold limit, means in the current year his turnover exceeded threshold limit in the December only. Once his threshold limit exceeded na, he ceases to be a composition person. He ceases to be a composition person and will pay tax as a regular taxpayer. From the day his turnover in the current year crossing threshold limit. Sir, if the turnover of the person in the previous year is 140 and now he has availed composition scheme. Now he, from April to December, his turnover is 1.5 CR. So he will not be composition person after crossing 1.5 CR. He will be a regular taxpayer after crossing the turnover in the current year. Sir, whether he is eligible to avail composition scheme in the next year? Of course not, because his turnover is crossing 1.5 CR in the current year. So of course he will not be availing composition scheme in the next year. But even if his turnover is crossing 1.5 CR in December only now, he has to pay tax as a regular taxpayer from January. From the January after 1.5 CR, if he is selling anything, he has to pay tax as a regular taxpayer. He has to collect tax as a regular taxpayer. He will be issuing tax invoice as a regular taxpayer after crossing the threshold limit in the current year. So he has two options. He can voluntarily surrender anytime, or he has to surrender if his turnover is exceeding threshold limit or if he is breaching any condition. He has to surrender composition scheme in both the cases. He can voluntarily surrender anytime, or he can surrender if he is breaching the condition or his turnover is crossing the threshold limit. Sir, if he is surrendering, sir, what is the form? How he can surrender? Form is GST CMP 04. That is for withdrawal of composition scheme. If he wants to withdraw composition scheme now, form number is GST CMP 04. And with this, he has to file one more form, that is ITC 01. This form is for what, sir? Now he can avail ITC on stock. Now the situation is completely opposite. Now he's switching from composition to regular person. So when he was switching from regular to composition, he has to reverse his ITC on stock because now he's paying 1%. But in this case, the situation is opposite. He has purchased the goods when he was in composition, so he didn't claim any ITC. Now he is selling those goods after being a regular tax person, so he will be paying the full tax rate at 18% or 12%. So he can claim ITC on the stock, which was purchased at the time of composition and will be sold as a regular taxpayer. So it's a complete opposite position. In that case, now he can ask government to pay me all the credit because I didn't claim when I was a composition dealer. But now I am selling it when I am a regular dealer. So of course I can claim all the ITC on the stock. So he will be claiming all the ITC what he was having on the stock he was having at the time of quitting composition scheme, at the time of switching over from composition scheme to regular scheme. So it's a complete opposite what we have done at the time of availing composition. So when we are entering in composition scheme, we have to reverse ITC. When we are going out of composition scheme, we can claim ITC on the stock. So there are two forms. ITC 03 is for reversal and ITC 01 is for availment of stock at the time of opting out of composition scheme. So when you want to opt out of composition scheme, you can opt out any time of the year. So first of all, when can I opt out this scheme? At any time of the year. So there is a bar on entering in composition scheme. You can enter composition scheme only at the beginning of the year, but you can opt out of composition scheme at any time of the year. Okay, and the turnover, if the turnover is exceeding threshold limit, then you will be automatically out of composition scheme from the date your turnover is crossing threshold limit. And if you are breaching any condition, you will be automatically out of the composition scheme and you have to then file CMP 04 for withdrawal. And then how many days? It is to be filed within 7 days. If you want to quit composition scheme, you want to be regular tax person, just file this form within 7 days. For withdrawal of composition, then you will be a regular tax person. You also have to file ITC 01 for availing composition scheme. So this is the procedure of opting in and opting out of composition scheme. So what is the threshold limit? Same limit, 1.5 CR, 75 lakhs and 50 lakhs. Depends where you are. The same limit, 1.5 CR, 70 lakhs and 50 lakhs is the threshold limit, even for the current year also. Even for the current year also. Yes, these are the same limits for the current year also. So this is the way of opting out of composition scheme. So we have covered everything in the composition scheme from the scratch. who can avail composition scheme, what are the conditions of composition scheme. We have covered practical questions also for composition scheme. I have covered the comparisons for composition scheme. I have covered the conditions for availing composition scheme. I have covered the procedure for availing composition scheme. Now in the rest 5 minutes, I will mark your module and let you know what are the things you can read from this chapter in your what we have covered and what you can read from this module. This is in your module on the page number 54. So what you can read, I am marking it. You can read this from here. This you can read. You can read this. I have already covered that what is the turnover limits and what are the options. I have already covered this. So you can also read this in your module. This is also a reading part. Then I have already covered some example. You can read all the examples which are given. You can also read this. I have already covered what is the definition of aggregate turnover. So also you can read this. You can also read this. You can also cover all these examples. I have already covered or ticked all these examples. You can read these examples. I have already covered this example in your presentation also. You can cover all these examples. Now, sir, what you don't have to read. First of all, you don't have to read this. Why? Actually, this provision is actually applicable only for 1st July. So what you don't have to read this wala part. You don't have to read this wala part. CMP 01. Why? Because this form was applicable for 1st July. So this we don't have to read now because this form is actually applicable for 1st July, guys. 1st July 2017. Now this is not relevant. This we have already covered CMP 02 and GST ITC 03. I have already covered CMP 02 and GST ITC 03. I have already covered REG 01. So of course you can read this. You can read this, okay? You don't have to read this because this is related to CMP 01. Now this is not in your syllabus, not relevant. So you don't have to read this, okay? After that, you can read this. You can read this. This is basically switching over from regular to composition. I have covered that. And then there are a lot of examples. I have also covered rate of GST 0.5, 0.5, 2.5, 2.5, 0.5, 2.5. I also covered this. You can read this. I have already covered it in the notes. You can read all the examples. This is for other services. I have also covered this, that what are the conditions for other services. All the conditions are also applicable for other services. I have covered all this. Final and the last thing, these are some forms. I have to cover these forms and then we are done. I have already covered CMP 01. You don't have to cover CMP 01 because it was actually for 1st July. Now this is not relevant. I have covered CMP 02. That if I want to avail composition scheme, then I have to file a form. That form is called CMP 02. Okay. Sir, what is the form for CMP 03? Now this is not relevant. Even now this is not relevant. So you don't have to read CMP 03, not relevant. Not relevant. I have already covered CMP 04, that is withdrawal from the scheme. It should be filed within 7 days. I have already covered that. This and this is not relevant now. What is CMP 05? Now this is very interesting. A person is contravening the provision of composition scheme and he is continuously selling in the composition scheme. He is not withdrawing. A person is actually selling goods outside the state under composition bill. He is collecting tax from the customer and department is getting all these knowledge. He is getting all the information that this person is selling outside the state, that person is collecting from the customer. He is actually breaching all the conditions and he is not withdrawing from the composition scheme. Now he is a tax evader. He is evading the tax and then department will issue a show cause notice in which he will say, you are contravening the composition scheme. We will not allow you to be a composition dealer. We are withdrawing your composition scheme. Department can issue a show cause notice. That notice will be gone in the form of CMP 05. When a person is contravening all the provisions and he is not withdrawing the scheme, then department will issue a notice for that. That form is called CMP 05. Once taxpayer will get notice, he will get an opportunity to reply within 15 days. And what is the form number? CMP06. In CMP06, he will reply this notice and he will explain that I am not contravening, sir, you are getting a wrong information. I will prove you that I have no contravention and I want to be a tax composition person. He has to reply within 15 days in the form number CMP06. Now, department will issue order in CMP07. Department will issue an order in CMP07 that he should be under this scheme or not within 30 days. And we will cover CMP08 later in return chapter. CMP08 is basically covered in return chapter. This form we will cover later in return chapter. That what is CMP08. So these all are the forms that you have to cover. And with this, we are covering the composition scheme. There are a lot of practical questions given in your module. I will urge you, please solve all these questions. It will make everything very clear. And from tomorrow, we are starting with a new session with a new chapter. And again, this is a very interesting chapter. We will be covering all the exemptions. We will be covering all the exemptions. And I will recap all these slides in the tomorrow session only. I will give a recap of all these slides in the tomorrow session, and I will be covering exemptions session from the tomorrow. Okay, so I hope you will get this composition scheme. I will urge you to do all the practical questions. It is not possible for me to do all the practical questions here, to solve all the practical questions here because of the limited time. So I can cover theories, I can give some examples, but it is now upon you to do all the practice questions from your module. So please cover all the practice questions from the module. Read this chapter carefully. I will ask the management and will create a group of Telegram, and I will let you know what is the name of the Telegram group. Okay. Thank you so much. I hope you will get this session. You are enjoying the GST classes. You will get all the slides. You don't have to worry for that. Okay. So thank you so much. Enjoy. Have a beautiful and enjoy the day. Enjoy the weekend. Enjoy the Sunday. Thank you. Good day. Bye-bye. Thank you so much. Thank you.
Thank you so much, sir.
Thank you, sir. Thank you.